I have been investing in VOO and QQQ for years now, and they have changed my financial life. But lately, I have been thinking about something new. When it's the right time to take profit? Not out of fear, but out of purpose. In this video, I will share how I will know when it's time to take profit, and what that really means for a long-term investor like us. Hi, this is Austin. Welcome to my channel. I have been investing in VOO and QQQ for years now, and if you have watched my earlier videos, you already know how much these two ETFs have shaped my financial journey. They helped me build my first 150K. They taught me patience, discipline, and consistency, and they have become the foundation of how I invest. But there's one question I still get all the time. When are you going to take profit? It's a fair question, because if we are investing for long term, there's still going to come a day when we need to take money out. So today, I want to talk about something that most long-term investors don't discuss enough. How I will know it's time to take profit from VOO and QQQ. Not because I am scared of losing money, not because of market noises, but because I have reached a point where taking profit actually serves the purpose. First, let's make one thing clear. Taking profit doesn't mean selling everything. For me, it's not about timing the top, it's about realigning with my goals. When I think about taking profit, I'm not thinking about calling the peak of the market. I'm thinking about whether my money is now better used for something else. Maybe that's paying off a home. Maybe it's creating cash flow for early retirement. Or maybe it's simply reducing risks when I have already achieved my target. Taking profit, to me, is the real sign of fear. It's a sign of progress. It means my investors have done their job. They have grown, they have compounded, and now it's time to move from growth to use. I'll be honest with you. I have felt the temptation to sell many times. There were moments when QQQ was hitting new highs, and I thought maybe I should lock in some gains. I remember one time vividly. It was during one of the market runs where every day felt unstoppable, and I caught myself thinking, what if it crashes tomorrow? The fear almost made me sell, but I didn't, because I reminded myself that same fear existed every year since I started investing, and every single time the market recovered and went higher. If I had sold back then, I would have missed the compounding that turned those early gains into something much bigger. That experience taught me something important. It's easy to take profit out of fear, but the best investors take profit out of purpose. So, how will I know when it's truly time to take profit from VOO and QQQ? It comes down to one question. Will taking profit move me closer to my goals or further away? If the answer is closer, then I will do it. If it's just an emotional reaction, then I won't. Because the truth is, every sale has two parts. The moment you sell and what you do after. If your selling doesn't give you your money a better purpose, like funding a goal, security freedom, or improving your peace of mind, then it's just emotional losses. And emotional losses is the enemy of compounding. Over the years, I have thought carefully about what kind of situations would make me actually take profit, and I have narrowed it down to 3. 1. When my life goal needs it. The first is simple. If my investments can directly fund a life goal, then I will take profit. That could be buying a property, funding a move, or building a small business that gives me more freedom. Because at that point, the money isn't just sitting there, it's working for me in a new way. It's fulfilling the very person I started investing in the first place, to build options, not just numbers. I am not against selling if it creates meaningful changes in my life. That's not losing an investment, that's completing a mission. 2. When my allocation gets too unbalanced. The second reason I take profit is when my portfolio becomes too unbalanced. Let's say QQQ grows much faster than VOO and suddenly it makes 70% of my portfolio. At that point, I might trim it slightly. Not because I think QQQ will crash, but because I want to manage my risk. That is what I call trimming, not timing. I'm not exiting the position, I'm just restoring balance. By taking a bit of profit from the overgrown side and redirecting it back into VOO or cash, I protect myself from being too dependent on one type of market behavior. It's a small action, but it keeps my portfolio healthy and intentional. 3. When my risk profile or life stages changes. And the third reason is if my personal situation changes. Maybe I reach a stage where I need more stability than growth, or I want to create cash flow instead of pure accumulation. In that case, taking some profit from QQQ or maybe shifting more into VOO or even a dividend ETF could make sense, because as your life changes, your investment goal should change with it. I don't want to hold something aggressively if my real goal becomes preserving wealth, not building it. So taking profit then isn't about fear of the market, it's about aligning with life's next chapter. Now let's talk about the times I wouldn't take profit, because honestly, knowing when not to sell is even more important. I wouldn't take profit just because the market is at an all-time high. That's when most people sell, and most of them regret it later. I wouldn't sell because of bad headlines, recessions, or temporary corrections. Those moments are painful, but they are part of the process. And I definitely wouldn't sell because I am bored or impatient. That's something I have seen happen a lot. People who get tired of slow growth, so they cash out and chase something new. But the impatience is exactly what destroys compounding. VOO and QQQ have proven for decades that the time rewards those who stay. So, unless one of my 3 earlier reasons apply, I'm not touching my core holdings. Because in long-term investing, doing nothing is often the most powerful move you can make. When that day comes, when it really is time to take profit, I already know how I will do it. First, I will do it gradually. Never at all once. If I take a profit from a goal, I withdraw in steps, maybe 5% or 10% at a time, so I don't lose the benefit of staying invested. Second, I will do it intentionally. Every dollar I take out will have a plan before it leaves. If it's for major goal, it goes into a high-yield account or a stable asset. If it's to reduce risks, it will be allocated, not spent. And third, I will do it calmly. No panic, no rushing, because profit taking should feel like a progress, not relief. Let me share one small story. A few years ago, I almost saw a big part of my portfolio. The market had gone up sharply, and I told myself, maybe I should be smart and lock in gains. It felt logical at the time. But looking back, I realized it wasn't logic. It was emotion disguised as logic. I was scared of losing what I gained. Thankfully, I didn't sell, because only a few months later, these same investors went on to grow even more. That moment changes me. It reminded me that the real maturity in investing is just about knowing when to buy. It's knowing when to do nothing. Taking profit is fine when it's tied to purpose, but when it's tied to fear, it almost always leads to regret. So here's how I look at the profit now. Profit is not an event, it's a signal. It's a reminder that the system works, the patience pays off, but it's also a test, because every gain asks you the same question. Do you trust the process enough to keep going? When I see my portfolio hit new heights, I don't rush to sell anymore. Instead, I ask, does this change my goals? If the answer is no, I just keep going. That's how I knew I have finally built an investor's mindset. I'm not chasing outcomes, I am managing alignment. So, when will I know it's truly time to take profit? Honestly, it won't be when markets are at the peak. It will be when I reach a peak, a point in life where taking profit gives me more freedom than holding on. When investing turns from growth into peace. When my portfolio becomes the tool that funds my life instead of being the project that defines it. That's when I will know it's time. And even then, I won't leave the market. I will simply shift from building wealth to using wisely. If you're watching this and wondering when to take profit yourself, my answer is simple. You will know when your goals tell you, not the market. Don't sell because of fear. Don't sell because someone online said the top is in. Sell when your purpose changes, because in the end, profit isn't the finish line, it's the checking point. It's the moment when your money starts working for you, not just with you. So until that day comes for me, I will keep holding, keep buying, and keep trusting the process. Because the market doesn't reward those who react. It rewards those who prepare, those who stay calm, and those who understand that patience isn't weakness, it's strategy. Thanks for watching, and remember, you don't need to sell to succeed. You just need to keep growing until your money finally serves your life, not the other way around. I'm Austin, and see you next week.